Hey traders, Raghee here, and in this recap video we're going to cover the S&P. And I'm going to cover the trade that we took, but I'm covering this mostly so we can discuss the contrast and clarity. And this came up in the chat room, which is someone talked about how they were stuck on a certain time frame chart. And I said, thanks for being so honest and sharing an issue that I think a lot of traders have, which is we'll try to find a favorite time frame, as if that time frame is going to be the one that if we focus on, it's going to yield all the trades that we need. And I want you to be more fluent along the different time frames that we look at. In other words, don't look for a favorite time frame, look for the best clarity. And sometimes that might be a 2-minute time frame, and sometimes that might be a 240-minute time frame. But there are certain time frames, and this is rigid, this part is rigid, that are visual anchors that will open the door to you considering other time frames. In other words, if I don't have a trend on the daily time frame, I will not look for setups along the 480, 240, 180, and 120. In fact, right now I could probably just get rid of those charts because there are so few daily time frames that have a trend. I'm not going to look for longer term intraday clarity if my daily isn't trending. I mean, where are those time frames going to go? There's not enough room for them to organize into a setup, trigger the setup, follow through, hit a profit target, right? So there's not enough space for them to actually do that. And when there's not a directional bias, if there's not an overwhelming amount of bullishness or bearishness, it's hard to get longer term time frame organization. It's really that simple, which is why the day trading is so tempting right now. Day trading means I don't need a wide range. I don't need commitment from Monday to Tuesday to Wednesday to see follow through. I can just trade Monday and start with a clean slate on Tuesday and start again with a clean slate on Wednesday. And I don't need as much day-to-day follow through. So the visual anchor that I like best is the daily, preferably, which right now it's choppy, but something interesting happened the last couple of days. We ended up with 5 propulsion dots. So clarity is a consistency in a single candle color, in this case red, and then at least 5 propulsion dots. And this is a pretty rigid thing. It's got to be 5. And I don't mean that suddenly 5 dots appear. It's got to be consistent within a consistency of red or green. So the one blue candle arose today, but not after the market printed. Plenty of red grab candles and then the 5 dots, indicating that there is a pretty good chance we're going to see weakness. Now, this might seem kind of strange because just the other day I said, hey, let's buy this thing. But let's think about where we were positioned. Here we are now. We were down in here, which is oversold. Within the context of chop, when you get down to that lower edge where you see those wicks and that support, it's much easier to say the only way is up when you're on the floor. And when you get up here at the ceiling, it's a whole lot easier to say, yeah, we're going to head down off the ceiling. So head up off the floor, head down from the ceiling. But the key is to wait until we get to one of those edges. The advantage is at the edge. But in the middle here, all along in here, there's nothing really to say we have an edge. That's kind of no man's land. Anybody could be a winner in there. But we have a slight organization to the downside. So this morning I said, look, there's very little clarity, consistency of a single candle color, and the 5 dots across any time frame but the daily, and we started to get some clarity on the 60. So I said, well, if we're going to get some weakness on the daily, let that be the trigger for a correction that we will ultimately buy into at 26.50. And that was it. We were going to wait for the market to come down to the 21 EMA. Why? Because we had the dots. Notice that I've removed the moving averages. If the moving averages aren't there, and I'm waiting for the propulsion dots to appear where the moving average would be, if that moving average is not valid to be a buy level or sell level, it simply just won't appear. It'll be gone. There'll be nothing there really to key off of. So the great thing about using propulsion dots in lieu of a 13 EMA or a 21 EMA is if they're not lit up with at least 5 dots, There's nothing there to consider. And that's exactly where we bought from. Bought there, looked for the market to move up to this Darvis level. Everything was already predetermined, pre-analyzed for us. Buy the dots, sell the Darvis. And that's as easy as today was. A pretty simple 20-point gain. And that's how we came upon it. So just remember that when you have a lack of clarity, your best bet is going to be wait for the market to correct, because that's usually going to be exhaustive, and then ride it back to levels that it's already been to. Don't expect the market to go anywhere it hasn't already gone today to take an initial profit. So that's the S&P. That's a lot of the environment we're in across many time frames on the daily. Gold, unleaded, heating oil, silver's this way right now, unleaded gas, crude oil. There's a lot of chop in this market right now. A lot of grains are in chop. The equities index futures are in chop. So just remember this advantage at the edge. And then in the meanwhile, inside the daily chop, go to short-term time frames. Think like a day trader. I'll see you in the next update.